All right, and welcome back to another episode of the Indy Investor Pod. I am so excited to do this episode here today. This podcast, what we wanted to, Brett and I kind of just had this thing of what we want to do with this podcast and basically just put it together to educate people on anybody that's investing here in Indianapolis. And we kind of had a version of this back in the day with Real Talk Radio through Cyria, and we were doing it along with Dave Short and Sterling Davis, and we also had Ron Watson on with us as well. And we did it for what? It was a year and a half, fellas, something like that. So we had a lot of really good episodes, and we kind of went away from the radio. We tried to put it out as a podcast. Things happen, in this business, things always happen, and we have to roll with the punches. So we decided to roll out kind of a version of the Indy Investor Pod. We're going to do an episode every other Monday, basically with the Real Talk crew. So I'm going to have me and Dave and Sterling kind of jump on here and talk about different topics when we get into just real estate investing here in Indianapolis. This episode is brought to you by Cyria. And with that, I'm excited, and let's get on with the show. All right, and welcome back to another episode of the Indy Investor Pod. This is a real talk kind of episode. So we're going to do these every other Monday. I'm going to have Dave Short and Sterling Davis here with me, and we're just going to kind of take a different topic and just talk about how it relates to real estate investing here in Indianapolis. Excited to have these guys on with me again. I know a few weeks ago they were on with me along with Steve Lehman, and we did just a series on the Indy neighborhoods and had a lot of positive feedback, a lot of just awesome stuff that people said about that. And they love the fact that you guys, just the wealth of knowledge that you guys brought to the show. I really appreciate it. And I know our listeners appreciate it too, as well. So now I'm excited to kind of venture out into doing this. So every other Monday we'll be on here, picking a different topic out and just kind of rolling with it. And I thought the best thing to do with us kind of for this first 3 times we do this is we'll just pick each of our different strategies, are basically what we do within our business. So today we're going to focus on wholesaling a little bit. I'll let you guys kind of pick my brain. We'll talk about wholesaling here in Indianapolis, how that goes, how it is, if you're a flipper or you are a property manager working with wholesalers, that type of thing. And then we'll roll into, in a couple of weeks, we'll have an episode with Sterling where we'll focus on property management, how that works here in Indianapolis, just some do's and don'ts and tricks and tips and all that kind of stuff. And then we'll finish it off too, and we'll do an episode with Dave, kind of feature him and talk about the flipping market here in Indianapolis. And then from there, we do a little bit of everything. Those are our main priorities, kind of what we do within our business, but we have a lot of other strategies that we work within our business as well that will definitely put forth that knowledge as well later on in some other episodes. So gentlemen, thanks a lot for joining me. Really appreciate it. Let's go ahead and do this real quick. And Sterling, we can start with you. If you want to just kind of give just an intro, I know a lot of people know you and you've been on the show before and stuff a couple times, but go ahead and just do a little intro of who you are, what your company is, and just anything you want to share, man.
Yeah, excellent. Thanks, Brian, for putting this together. It's been a while. We've always talked about getting the band back together. So it's really nice to get back together and talk with you guys. I always leave these just so inspired. I'm like, man, I got a great idea with leaving these podcasts that we do. So I'm Sterling Davis. I'm with Fosti Property Management. We're a full-service property management company. We have a brokerage side. We can oversee rehabs, and then we manage the asset for investors as well. Our goal is to enhance the quality of our community. So it's a little bit more than just managing properties. It's the people. We realize that it's a people business, and the shareholders in our business is the investors, the tenants, and our maintenance people that we work with. So that's just kind of what we believe in. It's a little bit more than just property. So thanks, Brian.
Yeah, man. Dave, how about you?
Well, I'm Dave Short. I work at Century 21 Sheets. My company is Avalon Management Group 1, and we're predominantly a fix and flip type company, and we create some mortgages and treat them as fix and flips also. So that's starting to go fairly well, and I'm anxious to dive into this. It's great to be back and doing this kind of stuff again. I like to put out the knowledge, and hopefully people can learn from it.
Yeah, definitely. No, I really appreciate you guys, and thanks a lot for joining me on here today, and then just going forward as well. And I do want to, since this episode is brought to us by Cyria, definitely a sponsor for this show, and I know you guys are on the board of Cyria. So if you don't mind, real quick too, Sterling, you are the vice president of the board of directors of Cyria. Is that what it is?
Yeah,
the official title. So, and then
Yeah.
Dave, what is your title then, bud?
I'm a vice president in charge of community relations. So it might be called membership director or something like that, but I'm reaching out to other people that's not been a part of CYREA to get them involved.
Awesome. So really, you guys just have two big, really fancy names. But if you want to know
Pretty
more about
much.
CYREA, what they do, or anything that the board does, definitely reach out to these gentlemen. So they can definitely help you out. So no, I appreciate it. And so today we're going to kind of handle the topic of just wholesaling here in Indianapolis, how that works, kind of, working with other wholesalers and things like that. This is what we do. So this is the main part of our business. We're about 80% wholesaling. And then we have about 20% owner financing stuff that we do with some notes and things like that as well. But our bread and butter is wholesaling. That's what we do. I know we have some educational classes that we put out. We do a subgroup here in Indianapolis as well. But really what I want to kind of dig into today is kind of just for anybody that is looking for investment properties here in Indianapolis. Maybe they're interested in wholesaling themselves, or maybe they're just looking for properties. Maybe they want to fix and flip them. Maybe they want to buy and hold them. Maybe they want to, burst strategy. Maybe they want to just, buy it, sell it on owner financing, any of that stuff. But a really good resource I think that people can have to be able to find a property in Indianapolis is through wholesaling or through other wholesalers. Wholesaling is a competitive market here in Indianapolis. I feel like there are a ton of wholesalers. There's some that do it really, really well at high volumes, things like that. And there's some that, you do need to be careful of and things, and not to poo-poo on anybody or anything like that. This is what this show is about, is educating people. And that's what we want to kind of dig into today, of like things to maybe be careful of, things to consider when you're working with wholesalers, and basically just making sure that you get the best property that you can, because all in all, a deal is a deal, and we want you to get the best property you can, no matter what your strategy is. So let me kind of turn it over to you guys. Well, let me go in real quick. Go ahead, Sterling.
Yeah, let me ask a question, because I think what you said is good. What have you seen over the, you're now if anybody didn't know, Brian's the CEO. So, I mean, congratulations to that. But what have you seen over the years? You've been in the game, 3-4 years now, and now we're going through a pandemic. What have you kind of seen the different shifts inside of wholesaling? I'm just curious.
Yeah. So it's kind of interesting. I would say over the last, 3 years since I've been around in this, and one of the big things I've seen is just kind of I guess you'd say the players that are involved in wholesaling throughout Indianapolis. There are some wholesalers, like I said, that do it on, do a high volume of it and then put out a lot of big properties and stuff like that. But then when you get to, and then there are a lot of smaller wholesalers too, that maybe are doing 1 or 2 deals a month, trying to get into the game, trying to do that type of stuff, which is great because we work with a lot of those newer wholesalers, people that are trying to get in, and a lot of them do a really good job. But what I've seen kind of coming out of this pandemic, since you kind of asked about that, like I've seen a lot of those smaller wholesalers, or the ones that were just trying to get into it. I've seen a lot of them go back to their 9-to-5 jobs, unfortunately right now, or have to go find another job and things. So it is a competitive market here in Indianapolis. There are a lot of people that are trying to wholesale. And for anybody that doesn't know, if you don't know what what wholesaling is basically it's when you're talking to a motivated seller, someone that wants to sell a property, you get that property under contract, and then you sell the contract to somebody that wants to buy that property, basically. So since you have it under contract, you have the right to sell that contract. So you're not selling the property, you're selling the contract, and then that end buyer is going to buy that property. So it's a really good way to. Go ahead.
You explain the difference between hoteling and wholesaling, because I had this long conversation with this investor, and he was like, "What?" I was like, "It's a good opportunity, actually."
Yeah. So, and that's one of the things what's one of the big changes too of what people have kind of started to do now, that people that have been doing it for 2-3 years and stuff like that, they now have a little bit of money, so they can start wholesaling a little bit more as well. So that's one of the changes. So when it comes to wholesaling, there's basically kind of 3 strategies that you could do. You can assign a contract, you can double close, or you can do wholetailing, or what we like to call the simple close, because we had to put the name simple in there somewhere. But so if you're assigning the contract, that's basically what you're doing. You're getting the property under contract. You're not basically you don't own the property. You don't anything like that. You're not buying the property. You just have it under contract, and you're selling your right to buy that property, which is you're selling the contract, is what that means. The double close is when basically you are buying that property yourself, and then basically closing it or then selling it later that day to somebody else, or maybe later that week. Just kind of a really quick transaction where you buy it and then sell it. So that's kind of called the double close. There actually is 2 different closings with the title company within that. And then the wholetailing is more of the strategy of you're going to buy the property, maybe you're going to do something to it, or maybe you're not, but then you list it on the MLS. So we're a brokerage as well. So we're able to list our properties as well. Some wholesalers are also, brokers as well. So they get a listing agreement, so you can still assign it if you have a listing agreement. So you can kind of work it out that way too. But when people talk about wholetailing, is basically where for our strategy is, what we do is we buy it, we clean it out, we maybe do a couple things to it, just kind of, clean it up a little bit, make it look a little prettier, and then we put it on the market and sell it that way. So that'd be the wholetailing model. So we actually do own the property. We're selling anything that we market, anything we sell, we own. Now we do assign some contracts too. If maybe we can connect it with a buyer right away, we know exactly what they want, we can just assign it to them instead of buying it ourselves. So yeah, there's a lot of different strategies. And I like you kind of coming back to your question is, I feel like that's where I think a lot more people are going into. I think, starting off, there were a lot of people that were assigning contracts and doing it that way. Now that people are kind of getting used to the business, they have some money generated and stuff. You see a lot more people that are double closing or wholetailing it to where they're buying it, maybe doing something to it, and then selling it to their end buyer on the opposite side that way as well.
Hey, Brian, one of the questions I've asked, what's you guys' position? We've talked to a lot of wholesalers and been on podcasts with them, and a lot of them seem to have taken let's get in the bunker right away and protect our asset, our cash and bank. So not advertising as much, not doing lists as much. What's been Simple's position in this marketplace?
Just as far as as far as marketing it to buyers or that way, or
remarketing to find new product to come onto the marketplace.
Oh, gotcha. So when it comes to the marketing, honestly, we haven't slowed down on any marketing that we've done. So to be able to find new properties. So we've made a couple of changes. So we do a lot of direct mail. So when you send out, that's when you're, basically getting a list and you're mailing those people. Maybe you send them a letter or a postcard, or we've done some things that look like wedding invitations or some fancy envelopes just to get them to open the thing. So one of the things that we've done is, instead of sending out letters or the invitations, we've just done postcards lately. It's cheaper. It's about a third of the price of doing letters and stuff. So that's one we've cut back, but we still continue to do marketing. We do texting. So we do some text blasting stuff. But I guess I shouldn't say blasting. It's really just you're texting one person just at a time. You can't text a whole massive list for compliance reasons. So we do texting, we do cold calling. We have a TV commercial that's here in Indianapolis as well. So yeah. So we've actually
how did that fare? You know what I mean?
It's going pretty well. We've got some pretty decent leads in it. It's a really unique time within, I think, just wholesale. You guys are probably seeing it within your stuff too, of any marketing that you're doing or selling properties. Like nobody's selling properties right now. So it's really, the inventory is low across the board, I think, for the most part. A lot of people, I think, are just they know they can't be foreclosed on right now. So they're kind of just holding out, and maybe they can get an extra month or an extra 2 months out of that property because they know maybe in the future they're going to be in financial jeopardy or some trouble. But right now I feel like a lot of people are holding on. So what we've kind of seen with the TV ads in particular is, I feel like a lot of the leads that were coming in were more retail stuff, maybe people that were, they wanted to just kind of see what our price was, and maybe they're being a little bit more proactive. They know they're going to be in trouble, but they just want to kind of see what price is. Maybe they can list it, maybe they can't. So we saw a lot of that, especially for the first 2 months. But right now, we've had a lot of TV ads coming in that we're working, and they're pretty good properties right now. So I think people are starting to realize, all right, this is going to catch up to us now, and hopefully some of this inventory starts to open up a little bit for all of us across the board, where properties do come available a little bit more.
Because of your brokerage connection, when you have these retail leads come in, do you guys is one of your strategies trying to convert those to listings?
So right now we don't. We really don't work our retail brokerage side as far as just listing properties for other people. We're looking to bring on another broker onto our brokerage to handle that specific thing. So if anybody out there is listening, then they're like, hey, I know how to be a broker, I know how to be an agent, but maybe I'm not getting enough leads, or I want something like that. Like, we have that opportunity. So if anybody's interested in that, but
what stations are you guys on?
Honestly, I should know that. I don't. I leave that up to. That's one of the things that we have our ad person, and he kind of does his thing. He's out of Arizona, actually. He does it for a lot of real estate investors through the nationwide. So I don't know if anybody's seen my commercial. Basically, my commercial is the same. Like it's running the same. The guy from San Diego, Phil Green, he's running the exact same commercial, only it's him. Jared Irby down in Alabama, he's running the exact same commercial, only it's him. So then our guy, Darren Dame is his name, out of Arizona, with Bullseye Branding. And he basically he does this thing. And all I check is how many leads we have coming in. And if I have the leads that I'm happy with, if I'm getting the return, I'm like, hey, you keep putting it on whatever channels you want. So maybe it's not the most hands-on thing, Dave, but that's how I've been handling it anyway. So that's over my head. So, no, but I think one of the things that, kind of talking about this too, just the inventory that's coming in. What have you guys seen from, I know you guys buy properties and work with other wholesalers pretty regularly. So what are you guys seeing as far as other people in their inventory, what they have? Are you, just from my conversations, it seems like everybody's inventory is kind of low, having a little bit of trouble with that. But is that what you guys are seeing too when you're picking up deals from other wholesalers?
Well, I'm seeing more and more properties come back around where, waiting for I may be waiting for a price reduction, or I know I can't buy at that number. So I kind of wait and see. But it seems like every time that there's a price reduction, the property tends to sell. I don't know that it's, because they're not big price reductions.
Yeah.
And, we're looking at properties that, we wouldn't look at before to try to find, opportunities out there. So, but we have to be so much more careful on what we pay for these properties because of we're taking locations that before we might not have looked at.
Just because you need some deals, you need something to be working on.
Yeah, we need something, we're good now, but we won't be good in 30 days. So, we're trying to find some properties and, we're looking at, one of the strategies that we'll talk about on my podcast is, we're going into some neighborhoods that we wouldn't have touched because I would consider them strictly rental. And now I think there's flip opportunities in those neighborhoods.
Yeah. I think that's definitely something that we can, dig into in future and just future podcasts in general and just neighborhoods and stuff like that. Of like some of the changes, Randy and I were talking about that yesterday, on a podcast of just basically like how even like in Riverside of like, there's like certain parts of Riverside, like Riverside proper, where a year ago you couldn't convince me that people were trying to flip properties there. But like we literally drove through there 2 weeks ago. I'm like, people are literally flipping properties here and they're selling for decent prices. Some of them are way overpriced, but so it's happening around Indy. Yeah.
I did the same thing. I literally went on Riverside and I'm like, it was on the MLS. I saw like a $300,000 house on the MLS in Riverside. I said, oh, I got to go see this house. And I realized there was like land and you could develop it. But when I was driving down the street, right against it was like 17th and Sugar Grove area, I saw flips. I was like, oh man, well, they were still south of like 17th, 18th. But it was like, oh, okay, yeah, this is great. I mean, to your point, what I see with wholesalers, I think you hit it on the head. I mean, we used to thrive on the small wholesaler, like the small wholesaler that we could JV with, we can sell. Those was the best. Mm-hmm. No longer are they really prevalent in our marketplace anymore. So you kind of have to get a little bit more creative. But the thing is, it looks like right now in our business that in inventory is going this way. Investors coming into the market is this way.
Yeah.
And it's like, man, like how I had a call with our marketing guy yesterday because it's all these people are coming in the market. He's like, what should I tell them? I'm like, listen, like, I think we have to be honest with people. We kind of have to be honest with them and say, hey, like they were asking us, do we think we can fulfill their need? Meaning like me personally, can I service them and give them good customer service? I'm like, no. We can do that. We can call them. We can follow up on them. That's not the problem right now. It's can we service 50 people and find 50 different properties for those 50 people? I just don't know if I can. I was like, so I don't think that's a us thing. I think if you go to 50 more brokers and you spread them out across the people, they're going to have the same issues.
Yeah, I
And
mean,
Brian,
that's
I think you can, I also think then tying on to Sterling, what I'm seeing here, especially the newer wholesalers, the people that's doing one or two a month, I think what happens is they seem like they were the first ones to, get in the cave and, to bail on it. And it's just lack of consistency.
yeah.
And I know you're finding deals out there because you're consistent. And I think these new wholesalers, that's the first thing. I mean, I'm consistent in my business looking for deals every day.
Yeah.
And they can still find them. They might have more of an advantage today than they had. So I would tell the new wholesalers that. I mean, now's the time to kick butt.
Yeah, I mean, I 100% agree with that, because you have a lot of things now, and that's the thing that one of the questions that I always get asked of, like, with some of the education stuff we do, of like, why are you training your competition, or why do you go have lunch with like a Will Hall, or talk to Ben Grice, something like that? Why do why do I? Well, I don't look at them as competition. I look at them as allies. I look at them as people that I'm just in the business with, because for every property that somebody sells wholesale, or does anything like that, or a seller that gives it to a wholesaler under contract or whatever it is, that's one less property that they're trying to list with an agent. I don't have anything against agents. I'm an agent myself. So, but it's just one more thing. It's just one more person that it's kind of opening that up to, oh, okay, you can list it. You can, you can sell it through a wholesaler. You can do things like that. It's available. There's a lot of options out there other than just one thing. So I think it's a positive thing. And I think some of these, these young guns out there that are hungry, and they'll go out there and, knock on doors, maybe not so much during COVID and stuff, but that they're hungry, and they'll go out there and drive for dollars all day long and stuff. So there's a lot of really good opportunity there. One of my only big concerns with that is what I've seen some wholesalers do, number one, of just not being able to price properties correctly. So, they're trying to make $30,000 on every property, no matter what it is, where it is, and things like that. So that's always going to be, I think, an issue with people that are getting used to it and things. But what I've seen too is that some wholesalers, they'll get a property under contract, and then instead of just using, exhausting every source they have to sell that property, they just let the contract go and they'll let it expire. I'm like, instead of trying to make like $1,000 or $2,000, that doesn't make them happy. They won't sell it unless they make $10,000 or $15,000 on it. I'm just like,
Brian, I get, one of my strategies with wholesalers is, something comes through and then it's markedly high, and I know I can't deal with it. I'll typically still go look at that property and say, hey, I'll give you a bid at this number. I said, I'm a buyer at 55. They've got it listed at 67.
mm-hmm.
So, I get 2 or 3 deals a year from that because they can't sell it. So rather than call all the other people that looked at it, they'll go to the seller and try to negotiate a new price at 52 and then sell it to me for 55.
Yeah. And that's a great strategy. That's what we kind of tell them to do, of making sure that, and we lost Sterling real quick, but hopefully he'll be back on. But that's a really important thing to be able to do. I always come back to too, of like, I think your reputation is so important in real estate investing in general, but especially in wholesaling, because some wholesalers get a bad rap sometimes and stuff. But, when it comes down to that, Dave, of you being able to sell that contract for, and just make a couple grand on it, a couple grand is better than nothing. And better than, hurting your reputation and stuff. So I think it's a really good strategy. And also, I mean, that's what we do as well. We say like, hey, this is the price that we can give you. If you can't sell it, come back to us and let us know. We'll help you out. And kind of coming back to your original point too, Dave, of just like how many deals are in the follow-up. So whether you're an investor and you need to follow up with that wholesaler and you're doing that, that's a really good thing. But also if you are a wholesaler, like just being able to follow up with your sellers consistently, to be able to find those properties, they're out there. So it's all about the follow-up. You're going to get a lot of no's, a lot of, go hit the road, those kind of things, but being able to follow up and being able to be consistent with it is very important.
Well, and I think we've got several transactions over the years where, that strategy has come into play, because one of the things that I'll tell them, and, the contract may expire Friday and they have nothing but my offer on the plate. And if they go back to that seller and say, look, I can't give you the 55, but I can close for I can close in 2 days at 50,
Mm-hmm.
then I get that transaction. Where before I wouldn't have done it because all's lost to the wholesaler unless he closes with me, because he didn't put that strategy out to other agents
Yeah.
that, that's willing to close.
Yeah.
So, just as a good buy and flipper or buy and hold guys, is get to them and say, look, I can create a quick time squeeze and get your transaction closed. So, it's a great strategy for a guy like me.
Yeah. Oh, 100%. Dave, what's one of the things that that maybe you see, or kind of one of the issues, or even just like a tip that you have for people that are buying from wholesalers? So what's your kind of advice for them, and things that maybe to look out for, just something to maybe consider?
I think for, a lot of guys that I've seen that's overpaid for properties is they've relied on the wholesaler scope of work.
Yeah.
And the scope of work is, I saw one a couple weeks ago, in their scope of work, they had, electrical at $1,000, and just looking at the house, I know it's $8,000 to do the electrical. So I know their scope's no good. So I have to, and sometimes it's training them. I said, hey, your scope's way off here. And, based on this and this and this is my number. And it's because of your scope.
Yeah.
So, but that's probably, it's not even a beef anymore. Only from the fact that if they use an inaccurate scope, then they're probably paying too much for the property, or they've got it listed too high, and they're doing what I call forcing. They're forcing a number, rather than the number's the number.
Right.
I'm poor enough already at getting the scope right, so I can't make that error, and that's why I can't buy what I call thin on these wholesale deals, because I know I'm going to be. It just seemed like I'm 25% over on everything.
Mm-hmm.
So.
Yeah, and I think that pushing part is part of the business, and that's why you have to stick to your numbers and know your numbers, and be on top of what you can, and be like, this is, and like you said, even providing a reason, and like kind of doing a little bit of helping educate, of just like, hey, this is why I'm at 55 instead of 65, because of this, and this. I think it always helps, but I think it's just important for any real estate investor, no matter what kind of property you're looking for. I never really, honestly, I don't really even consider the wholesalers, their scope of work, of what they say, like, oh, it'll be estimated, rehab cost of this or ARV of this. I'm always going to run my own numbers, or, have my contractor run their own numbers, or things like that. So I think it's definitely something to consider. You never know. I think it's just important. Always make sure that you know your numbers, you're running your own numbers, or having your people, your team run the numbers for you based off of going anybody.
My other big beef, and it seems like every wholesaler is guilty of, and it's just a really big beef for me, is Harlan's not Fountain Square. Okay.
Yeah.
State's questionable, but I'll give you state.
Yeah.
And but
at least just the west side of state or something.
It's wholesalers, drastically misidentifying neighborhoods.
Yeah.
That it's okay. I know them, so that's not a problem to me. But when a buyer goes in and he sees a property, it's a Fountain Square, or it's Bates Hendricks, or that kind of stuff. So it's just, wholesalers need to be accurate and identify neighborhoods properly.
Yeah. I think it's a big thing of just even them knowing what the neighborhood is before, when they're getting under contract. I think it's just super important, of just knowing your areas and things too, and knowing what your buyers are looking for. When people say Eagledale and it's not, it's down by the zoo, that's not Eagledale. Like, it's on the west side. That's it. It's not Speedway or Eagledale or anything like that. So yeah, big things too is like Fountain Square, Bates Hendricks. If it's in the vicinity, people just call it that, but it's not.
1000 North Pershing is not Speedway.
Yeah. Yeah. So no, really good stuff. Dave, do you have any just little last things here on wholesalers, kind of working with them? Anything you want to pick my brain about, or anything like that before we jump off here and dive into Sterling's episode, if we can get him back on Sterling's episode of property management?
Well, I think it's like anything that I stress is, it's consistency.
Yeah.
And you're either in the business or you're not in the business. If you've got one foot in and one foot out, then you've got both feet out.
Yeah.
So it's just consistency and trying different strategies in these times. None of us know for sure what works. And so we just need to keep trying different things all the time in your business, my business, Sterling's business.
Yeah. 100%. So just my last little tip here for anybody that is looking to get into wholesaling. I think there's a lot of great education out there that you can find for free before you go buy, some, heavy course or expensive course. See if that's really what you want to do. See if you have a passion for it. Go through a whole bunch. There's free education out there on YouTube, Facebook, even just through us, through Cyrea, all different places. See if that's really what you want to do. See if you are interested in it. See if you can get into it. Meet with some people that are doing it, meet with, title companies, look at contracts, things like that. There's some free resources out there before you go dump a lot of money into it. And then once you do get into it, if you like it, it's okay to dump some money into coaching and things like that, because that's important. You want somebody that's going to drive you through there, but make sure it's something that you want to do before you spend a lot of money on it. So, cause I've
Brian,
seen
that brings up a great question. What if somebody likes it, loves it, wants to learn it? What's a course, and what would a cost be for a course like that?
So I've seen all different kinds of stuff. So there's everything from, $1,000 packet thing that you can get, some everything to into like $30,000 courses that are going over, going to walk through certain deals and stuff like that. So, I honestly, I'm probably not going to endorse, any program itself. I can endorse some pretty good trainings. I know John Martinez has a really good training when it comes to acquisitions and sales managers. Steve Trang has a really good podcast, really good education, really good sales course as well. There's some people that's where I would probably put my money versus going into like, hey, I'm going to buy this packet from this wholesaler out in, Arizona or something like that, because the way they do it might work differently than the way they do it here in Indianapolis. So I would look at more of that's me personally of what I would kind of maybe spend money on, a couple grand here, a couple grand there on training, on specific trainings for like sales stuff versus like, hey, I'm going to have this course that they're going to coach me through how to do each and every deal. Cause I've really seen a lot of people struggle with that and lose a lot of money that way. So that's my personal opinion though.
Okay. Well, and it gives some people some places to go to.
Yeah. Yeah.
And, but like you said, the key is just, soaking up everything you've got here for free to see if that's what you want to do.
Yeah. Wholesaling is broken into it's marketing and it's sales. So those are the two things. You need to be able to, have the marketing to be able to get your phone ringing, and then you need to be able to talk to the people once they call. And those are the two big things. And so that's where I would focus on, where you spend money or doing any training. And there's some pretty good free stuff out there for that as well. But if you have money, that's what I put into. Also, I would say one thing, I would spend money on contracts to make sure my contract is good for my state and my city. And I know the title companies I work with are going to use that contract. So that's one of the first places I would spend money if I was wholesaling. So
yeah, that's pretty huge. I mean, because Google makes you think that you can find everything. Not to lie, 10 years ago when I first got in this, I was going to do a wholesale deal. I Googled it. And I remember like my first time I sent it out, it said the law of Denver, Colorado, da 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 da. I was like, oh man, like what am I doing? I was like, let me just go to, and then Janelle got me right. I was like, never do that again.
I've seen some strategies out there. I was just talking to a wholesaler the other day, and his coach and his mentor, his guru that he went through was, I think from, I want to say California. And that's great. He was in a really hot market, and like some of the strategies had him trying here in Indianapolis. I'm like, that's not going to work. Like it's in San Diego, a deal, like the market is just super hot. You can find a deal anywhere out in San Diego, and it's just a different market than it is here in Indianapolis. So some strategies are going to work, some things are not. So that's something to just be careful of. And then coming back to of just if you're picking up deals from wholesalers, make sure you're running your own numbers, making sure you're clear on that. But there are a lot of really good wholesalers here in Indianapolis. There are a lot of really good people that can trust, that you can bring some good deals to pick your brain. I always like to say you can definitely buy off us, but don't just buy off us. Buy off of everybody. Look at all wholesaler deals, because a deal's a deal. Especially at a time right now when inventory is low. Look at who has what and all the different deals out there, and then find somebody to make sure you can work well with them. And like I said, a deal's a deal. So go after it that way. So with that, we're going to jump off of here as we've kind of extended this episode a little bit longer, but that is okay because really good content. Really appreciate you guys being on here. And with that, we will jump off of here, and we'll see you guys back here in a couple weeks with an episode with Sterling where we kind of pick his brain on property management. So take care, guys.